So one of my high-yielding investments buckled last week and just went through a dividend cut. In this video, we're going to take a look at the situation revolving around Arbor Realty Trust, and specifically focus on what came out last Friday in their latest earnings report and where things might go from here. So on May 2nd, Arbor released their Q1 results, which they reported distributable earnings of 28 cents per share or 31 cents per diluted common share. They also declared a quarterly dividend of 30 cents per share, a decrease from their previous quarter, which was at 43 cents per share. It's a 30% decrease, and today Arbor's dividend is what it was back in 2020, a little under 5 years ago. One of the big issues that brought down their earnings in Q1 included more delinquencies in their loan portfolio. New originations were also down, and market volatility also resulted in decreased earnings for this company. With Arbor having to cut their dividend, there's now only 2 mortgage REITs left in this entire sector that haven't gone through a dividend cut since interest rates were raised. Out of the roughly 40 publicly traded mREITs, the last strongholds are Starwood Property Trust and Rithm Capital. Starwood's dividend payout ratio is right at 100% as of their most recent quarter, and Rithm could be transitioning out of what a typical mREIT does and instead be going for more of an asset management focused company. But now, nearly no company in this field has survived Jerome Powell's interest rate hikes, and rates being higher for longer are driving down all but one company in this sector. But going back to Arbor Realty, I always like to listen to a company's earnings call to get some commentary on a particular quarter. Arbor Realty CEO Ivan Kaufman said the following after discussing their latest earnings. Quote, "Recently, we have seen a reduction in the 5-year and 10-year interest rates, which, if this trend continues, will be a positive catalyst for our business. As we successfully resolve assets and if we continue to see rate relief, we believe we'll be well positioned to grow our earnings and our dividends again in 2026. Arbor Realty is a company that fundamentally transformed itself following the financial crisis back in 2008, where it was almost annihilated. Following their strategy change, Arbor was able to start providing consistent dividend increases, at one point growing their dividend every quarter for 3 years straight. It's encouraging that despite the bad news going on right now, they're already talking about growing their distributions again starting next year, as long as things improve. This is unlike every other mortgage REIT that currently exists. No other company in this sector has been able to deliver so many dividend increases, and it's what Ivan Kaufman wants for his company to be known for. However, where the company stands right now with their latest earnings isn't looking too good. In their fourth quarter 2024 results, Kaufman said they anticipated earning 30 cents to 35 cents in distributable earnings per share every quarter of 2025. In their most recent quarter, they earned 31 cents of distributable earnings, so they're already starting the year off on the low end of their estimates, but Kaufman reiterated his beliefs on the earnings call, saying that he's confident they will fall within that range for the remainder of the year. On the positive side, it was highlighted that Arbor's working on a pipeline for new agency deals that should deliver results. Kaufman said that it gives them confidence in their ability to deliver the range of guidance we gave despite the slower first quarter. There were some other good developments that came out of their Q1 results. That includes their single-family rental business, which brought in $200 million in new business and, according to Arbor, remains strong. They also closed $131 million of new bridge loans on top of $270 million that they closed in 2024. They also continue to grow their construction lending business, closing $92 million in deals in the first quarter and another $58 million just in the month of May alone. But despite these positive developments, all of this was still overshadowed by what was described as a tremendous amount of volatility and uncertainty. In this quarter, there was an uptick in loan delinquencies, which the company claims they have a plan for bringing down. But ultimately, the biggest drag was interest rates remaining higher for longer. With nearly all mREITs, when interest rates remain high, there's several different ways that it negatively impacts these companies. First, it's less profitable to lend when interest rates are higher. Second, high interest rates demotivates borrowers from seeking financing, which slows down business. And then thirdly, when rates remain high, they can put a strain on borrowers, especially if they have a lot of other debt already taken out. So what Arbor Realty and all these other types of companies are going through right now obviously isn't good. There's also another thing that needs to be addressed here. Considering Arbor did just go through a dividend cut, then does that mean all of those attack pieces by Viceroy and Ninji were right all along? For years I was following the short reports released by these two companies and monitoring their claims against Arbor Realty. In the reports by Viceroy, they claimed that Arbor Realty was a worthless company from a monetary perspective, that the company was a house of cards full of fictional investments that Arbor was lying about. They also claim that the collapse of this company was imminent. Their latest financial results, though, don't validate these claims that were made by Viceroy, and the company isn't worth zero. They're obviously still around despite Viceroy claiming that they were about to collapse a couple years ago. The same is true for Ninji's reports, which were also very sensationalized. Their theories, which include Arbor creating a secret holding company to hide a portfolio of bad mobile home properties, still hasn't materialized. An encouraging sign from this company is that no company insiders have been selling shares of their stock. According to SECform4.com, over the past 3 years, there have only been purchases of ABR stock by insiders and no sells. There hasn't been a tremendous amount of buying, but it's a good sign that the board knows that they can ride out these difficult times that they're going through. But what's it ultimately going to take for Arbor Realty Trust to get back on track, and how long will that take? The number one issue here is interest rates. That's going to be the most important thing. Jerome Powell has said that he anticipates 2 interest rate cuts this year, which would be a tremendous help for this company. Unfortunately, what could throw a wrench into that plan are tariffs. President Trump implementing tariffs, according to economists, could have a negative impact on the economy and could result in inflation picking back up. If that does happen, then Powell might not follow through on reducing rates this year. In a worst-case scenario, interest rates could always be raised if tariffs cause a lot of inflation. I will say this though, which is that Trump has toned it down with his tariffs and appears to be backing off in certain areas. Unfortunately, at times he has been unpredictable when it comes to his tariffs, and tomorrow could always bring something new. As for me personally, in previous videos I've mentioned how even if Arbor Realty did go through a dividend cut, that I wouldn't intend on selling my shares of it. That's still true, and I'm sticking to my game plan on that, for better or for worse. However, I do see myself dumping Arbor Realty if what Kaufman said doesn't come true. Right now I see 3 scenarios where I would likely sell my position in this company. The first is if there's going to be another dividend reset. If they announce that they're going to cut the dividend again, then I'm going to be out of this company. The second reason I would sell is if it looks abundantly clear that they're heading towards another dividend cut. For example, if next quarter their distributable earnings were quite a bit less than this current quarter, then I would likely sell my position. Finally, I'll also sell ABR if it looks like inflation is really starting to pick back up. That would make it clear to me that Powell will likely keep rates where they are and Arbor is going to continue to suffer. ABR used to be one of my biggest holdings a few years ago, but as time has gone on, I've diversified more, and today it makes up less than 2% of my portfolio. If I do end up selling all of my shares of this company, then I do intend to get back into this stock once things improve. We can tell that they are serious about wanting to grow their dividends again. Insiders own a lot of their stock, and they obviously want to see their income go up. Arbor Realty has a winning strategy that's exceptional when times are good. Unfortunately, at this point we just don't know when the tides will start turning and things will get back to normal, but I'll keep my eyes on this stock and give updates when I think it's necessary. But with that being said, that's going to wrap up today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.